All right, so I think we are good to start with the session. Once again, good evening, everyone. I'm Rashmi from greytHR and today's moderator of the session. I would once again welcome all of you today to our 50th Ask the Expert webinar, Parichay. And the topic for today is all you need to know about payroll changes for the financial year 2023 and 24. Well, before I dive into the topic, let's do a little housekeeping on how the session goes. So, as usual, the session is divided into two parts, wherein in the first part, there will be a presentation by our today's expert on the topic, which will then be followed by the audience Q&A. So, I can say audience Q&A is where you can start putting across all your questions, and we will be happy to take them up during this same. All right, so without any further delay, let's start our today's session. So as the topic for today is payroll changes for financial year 2023-24, we will broadly discuss the following essential subtopics in it with our expert CA Amaranath Ambati and understand the same in detail. Well, to mention our subtopics here, it will be all about latest amendments in the new regime and old regime, other amendments as per the Finance Act 2023, and changes in professional tax for Karnataka state, and changes relating to higher pension contributions as per PF Act. Well, before we start off with the discussion or the presentation by Mr. Amaranath, let me tell you a little more about Mr. Amaranath. So, as I already mentioned, Mr. Amaranath is a CA by profession and has around 19 years of experience in the fields of NRI, HNI, taxation, US tax and labor law consulting. He started his career in the International Executive Services Division of KPMG Global Services, where he worked on US tax returns and related compliance for expatriates. Prior to starting the firm, Amaranath worked in the global employers services practice in Deloitte, Bangalore. His expertise include various facets of global mobility like expatriate tax, social security, PF implications on international workers, ESOPs, immigration assignment structuring, etc. He was also an active member of the team which makes industry representations to the Ministry of External Affairs through NASSCOM in matters concerning social security legislations. And in his current role, he has assisted his clients on PF matters, issues relating to international workers, gratuity trusts, etc. He has also advised clients on matters relating to labor codes impact analysis, comp structuring, labor law compliances arising on account of merger or demerger, etc. So, Mr. Amaranath, we are very happy to have you here in this session. Looking forward for the exciting presentation. So over to you, Mr. Amaranath.
Yeah, thank you, Rashmi. And a warm welcome to all of you. And thank you for attending the session, making up some time for this session. So let us start with the session. Let me share my screen first. So first of all, I would like to thank greytHR for giving me an opportunity to share my views on this payroll changes for the financial year 23-24. Is my screen visible, Rashmi?
Yes, Mr. Amaranath, please.
Yeah. Okay. Yeah. So let us see what we are going to discuss. Rashmi has already briefed you about the discussion topics. So the first and the foremost important change which I envisage for financial year 23-24 is the new regime, the changes in the new regime as compared to old regime. So let us, before discussing the amendments, let us take a step back and understand why this regime was introduced and when it was introduced and what was the objective of this. So this regime was introduced in through the budget 2020, which was applicable from financial year 2021 onwards. The major objective, I would say, is to simplify and rationalize the tax provisions. The simplifications was one of the major objective in introducing this new regime. So when you look at the old regime, there are so many complexities involved or so many challenges were involved with respect to that, where there are many exemptions, deductions are applicable, and the documentation requirements is a humongous task both for employee and employer. And apart from that, these deductions or exemptions are not very straightforward. They are very, conditions oriented. And apart from that, you have to submit the proof to claim those deductions and exemptions. I mean, I have seen cases where the employee, assuming he will get an HRA deduction, he will go and get the rental agreement through his landlord, and then he will go and get the rental receipts, and finally he will submit to HR or payroll, and the payroll says, no, PAN number is required because your rental payment is more than 1 lakh. Again, he has to run back to his landlord to get the PAN and then again submit the same. So after doing all these things, a surprise may come to his notice that when he looks at the tax statement, HRA exemption is 0 because his basic salary or the salary is so high that he is not eligible and the rental payment may be less. So he is not eligible for the HRA exemption. So in order to avoid these challenges or complexities, the government came out with this new regime. So on the one hand, it eases the burden for the employee without submitting these things. On the other hand, it helps the employer also in verifying. I mean, he saves a lot of time and effort and manpower in verifying these proof submissions at the year end. So this was the objective. So let us see, what are these things which came across in the current year, financial year 23-24 through the Finance Act, amendment in the Finance Act. So just to recap this entire new regime, just we spend a couple of minutes on this recap, just to understand what was it. Prior to this 2023, how was it? So under the new regime, the exemption towards the following allowances will not be available. So one is the leave travel concession, then HRA, the most popular exemption, is not available under the new regime. So allowance for minor income of a minor child, which is coming under the clubbing provisions, 1,500 rupees per child was available. Again, that was withdrawn. And most of the allowances prescribed under section 1014 are also not available under the new regime. So then coming to the deductions foregone, standard deductions prior to 2023 amendment, the standard deduction was eligible only in the old regime, but in the new regime, it was not available. Similarly, deduction for entertainment allowance, of course, this is not applicable to the private sector. This is only a government sector where the deduction was available up to 5,000 rupees. Then profession tax paid. And one other common exemption or the deduction, I would say, is the interest on housing loan. See, if I have a own property where I am self-occupying the property, I am not eligible for HRA. Just to compensate that, another deduction which was available was the housing loan interest to the extent of 2 lakh rupees. Even this was withdrawn under new regime. So deduction for family pension to the extent of 15,000, even that was withdrawn. So all the major deductions under Chapter 6A, such as life insurance premium payment, tuition fee, or medical insurance, donations made under Section 80G is also withdrawn. And also another important thing is employee contribution towards NPS, which was allowed to the extent of 50,000 rupees under Section 80 CCD 1B, is also withdrawn under the new regime. So definitely an employee will be asking, so what is there for me in the new regime? What is left with to when it comes to the exemptions and deductions? So what is available is very few. Employer contribution to new pension scheme, that is national pension system, is allowed as a deduction under new regime. See, employer under Section 80 CCD subsection 2, it is employer contributions to the extent of 10% of basic salary is allowed as a deduction. So that is still available. And the following special allowance under Section 1014, that is transport allowance granted to a Divyang employee to commute between residence and office is allowed. And also a conveyance allowance granted to meet the official expenses alone is allowed as a deduction. So, and also like allowance granted to meet the cost of travel on tour or transfer, could be domestic travel or international travel. If the employee is traveling for the purpose of business, then whatever the special allowance or per diem allowance, whatever you call it as, that is exempt under the new regime, provided he provides the supportings or the bills for that. Then rebate under section 87A, which is available up to 5 lakhs of rupees, that is available in the new regime as well. This was available both old and new regime. So this is just a recap of allowances or the exemptions or deductions foregone in the new regime. So what are the changes brought in 2023 under the new regime? So before discussing this, just let us understand what made the government to come out with these new changes in the new regime. So when you look at the, just now we discussed that there are lots of exemptions and deductions foregone in the new regime. However, there was the tax rates were relaxed and the slabs were relaxed. The tax rates were also reduced to certain extent. But when you look at the exemptions and deductions foregone and what benefit I am getting through the relaxed tax rates, it was not commensurate. So it's been 3 years, that 2021, 21-22 and 22-23. So 3 years, when you look at, majority of the taxpayers were still going for the old regime and not the new regime because the benefit which they were getting there. That means to say that the tax, when you look at the total tax, it was still lesser in the old regime compared to new regime. So majority of the taxpayers were opting for the old regime. And when you look at the objective of introducing new regime, it is simplification. So obviously the purpose is not achieved at all. So the government rethought about this and relooked into the new provisions under the new regime, and they have come out with significant amendments in budget 2023, which is of course now it is a finance act, which is applicable from 1st April 2023 onwards. So let us take a look at what are these amendments or what are these changes. The first one is the new tax rates or slabs. Under the new regime, when you look into the tax rates, what was there last year and what is there today is entirely different. So apart from the tax rates, even the tax slabs are relaxed, even the tax rates are also relaxed. So we will see and we will discuss more about it in the coming slides. So let us move on to the next amendment, the standard deduction. So we just now saw that the standard deduction was available only towards the old regime. But from 2023 onwards, this is available from in the new regime as well. And when I say standard deduction, there are two places where we see the standard deduction. One is for a salaried employee where 50,000 rupees is allowed as a standard deduction under section 16(1), and the other one is on the income from other sources for family pension. It is 1/3 or 15,000 rupees, whichever is less is allowed as a standard deduction. But the new amendment gives the standard deduction for both these in both these places. So even for a salaried employee, the 50,000 rupees standard deduction is provided. And apart from that, even in the case of family pension, 15,000 rupees standard deduction is provided. So next comes the tax rebate. So 87A rebate, what we saw in the last year was available up to 5 lakhs. Now this limit has been increased to 7 lakhs only in the new regime. If you are opting for old regime, you will still claim the rebate only if your income is less than 5 lakhs. But under the new regime, this is available up to 7 lakhs. So when you look at standard deduction and the rebate, you can straight away you can conclude that if the total income of an employee is less than 7.5 lakhs, no need to collect proof, no need to look into anything. He is not going to come under the tax bracket. His tax liability would be 0. So this is easing the burden to the employer to a great extent, I would say, and especially the bigger companies where they have employees of more than 1,000. The tax rebate is increased to 7 lakhs. So if the total salary is less than 7.5 lakhs, the employer need not collect any proof or bills. Straight away he can choose the new regime and close it at there. This saves a lot of time to the employer as well. So the next important amendment is with respect to surcharge. Surcharge in the case of where the total income is exceeding 5 crores, under the old regime, it is applicable at the rate of 37%. Under the new regime, this was brought down in 2023 to 25%. When you look at the maximum marginal rate for a employee who is drawing more than 5 crores under the old regime, it was coming to 43%. However, now it is reduced to 39% under the new regime. So the 4% straight away reduction in the tax, and even if I presume that the income is just 5 crores, I mean not exceeding 5 crores, the savings is coming to 20 lakhs. So significant amount of saving for very high paid employees where the salary is more than 5 crores. Then comes the new regime is the default regime. Whether, I mean, this is a very important amendment where an employer has to note it. So earlier, the default regime was the old regime. So employees, while filing the return, if they want to choose new regime, they have to go and choose in the tax return that they want to opt for new regime. But from this year onwards, that is with respect to the returns where the employees are going to file next year for the financial year 23-24, if they want old regime, they have to go and opt for it, because if they do not choose anything, the tax department utility automatically calculates taxes under the new regime, because new regime is the default regime. Yeah, as we discussed, these are the tax slabs which are coming. So old regime tax slabs are anyway, I mean, very popular. We have been looking at from decades onwards. So up to 2 lakh 15 nil and 2 to 5 lakhs 5%, 5 to 10 20, and more than 10 30%. Under new regime, it is very attractive. See, the basic exemption itself has been increased to 3 lakhs under the new regime. 3 to 6 lakhs 5%, 6 to 9 lakhs 10%, 9 to 12 15, 12 to 15 20, and more than 15 30. Earlier, when you see last year, there was another tax bracket of 25%, which is completely removed now. So in a way, it is not only easing the slabs, and also the tax rates are also reduced and the slabs are also relaxed. So you see this in the next slide, where there has been a reduction in the tax rate. I have given old regime as well as new regime, and under new regime, financial year 22-23 and financial year 23-24 as well. So, and also under old regime, if there are 3 different categories of individuals, that is less than 60 years, 60 to 80 years, and above 80 years. But under new regime, there is no such differentiation. So everyone, all individuals will fall under the same tax bracket or the same slab. The same slab is applicable to all categories of individuals. So I have highlighted these things in blue. When you look at the 5 to 6 lakhs range, for financial year 22-23, even under the new tax regime, this was taxable at 10%. That's been reduced to 5%. So then again, 7 lakh 50 to 9 lakhs, that was taxable under the new regime at 15%, reduced to 10%. 10 to 12 lakhs has been reduced from 20 to 15%, and 12 lakh 50,000 to 15 lakhs has been reduced from 25 to 20%. So significant reduction in the taxes as well. So this 25% is completely removed. So last year I have the employee has chosen new regime. So it is not that this year also new regime, I mean old regime. So this year also old regime may be beneficial. So go and let me choose old regime is not the correct approach, because the new regime tax rates are changed. So my request is all employees, please educate your employees to relook at their data and the salary levels, and then opt for the which regime they would like to go for. So this slide comes, it's very interesting slide. I have given a old versus new regime for salaried employees with exemptions and deductions threshold. So the first column gives us the income levels, which is 5 lakhs, 6 lakhs, 7 lakhs. And the second column is the total of deductions and exemptions together, including standard deduction. Please note that these numbers are including standard deduction. So if an employee's exemptions and deductions are 1 lakh or 2 lakhs or 2 lakh 12,500, it doesn't matter whether he chooses old regime or new regime. If the exemptions or deductions are less than the numbers what I have given in the second column, then new tax regime is beneficial. But if the deductions and exemptions are more than the numbers which are given in the second column, old tax regime is beneficial for him. So just to take an example, I mean, of course, 6 lakhs and 7 lakhs, it is, if you want an indifferent position or a break-even position, it obviously it is 1 lakh and 2 lakhs. For 8 lakhs, if you take, when you calculate the taxes for 8 lakhs, Assuming he has 2,12,500 as exemptions and deductions, you will get 30,000 as the taxes to be paid under the old regime. Under the new regime also, for 8 lakhs with standard deduction of 50,000, you will get at 30,000 only. So this is the break-even number. This acts as a bird's eye view as to how to decide whether to go for the new regime or old regime. And more than 5 crores, as we already discussed, new regime scores well because the reduction in the surcharge. And where the earnings are from 15.5 lakhs to 5 crore, if the deductions and exemptions are more than 4,25,000, old tax regime is better. Otherwise, it is better to go for the new tax regime. So 4,25,000 is the cutoff for more than 15.5 lakh of salary. Why I have taken 15.5 is because I have included standard deduction also in the exemptions and deductions. I have taken 15.5 lakh. Otherwise, if you are taking 15 lakh, then you have to reduce the exemptions also to 3.75 lakhs, which is 4.25 lakhs minus 50,000. So comparison should be like that. If you are including standard deduction in the exemptions, income level also, increase the income level also accordingly. Otherwise, reduce the income level and also reduce the standard deductions under the exemptions and deductions. So now comes the first polling question. So Rashmi, will you help me to roll out the poll? Yeah. So do you believe if the income is more than 5 crore, new regime will be more attractive always? So here the options are yes, no, or it depends on the case-to-case basis. So we need to calculate and see whether which is more beneficial, whether old or new. And remember, the income level is more than 5 crore. So we already discussed that if it is more than 5 crore, there is a significant reduction in the surcharge. So, considering that, you could answer this question. Very rare scenario, employees having more than 5 crore, maybe promoters or directors, CXO category may have more than 5 crores. And when they come to you, what do you suggest? Whether to go for old regime or new regime, or you will say that no, I need to do your calculation and then revert to you.
So, Mr. Amaranath, I think we have the audience answers now.
Sure,
think,
sure. Yeah, sure. The poll results.
We can end the poll. Thank you so much.
Yes. Great. Yeah, 57% has answered correctly. That's the right answer. Yes is the right answer. As I already mentioned, since there is a significant reduction in the surcharge, which reduces the maximum marginal rate by 4%, there is a significant reduction in the tax liability, minimum 20 lakhs. So there is no way, even if you consider all deductions and exemptions, I don't think you can save 20 lakhs of tax, 20 lakhs worth of tax. So for people exceeding 5 crore, always new regime is more beneficial. No need to look at the calculation at all. So from employer perspective, what are the things to be taken care in a new regime? So in the first week of April, again, the CBDT, that is Central Board of Direct Taxes, issued a circular saying that the employers may give option to the employees to choose which regime they want for TDS purposes under Section 192. So if option is not exercised by the employee till last year, employer was obligated to go with the old tax regime. However, from 2023 April onwards, he must go with the new tax regime. So if you are rolling out this option and if the employee has not responded, you must go for the new tax regime for payroll purposes and for deducting the TDS. So once the option is exercised, employer cannot give that, cannot be changed for TDS purposes for the entire year. However, employee will still have an option to change the option he has chosen at the time of filing the returns, which means to say that at the time of for payroll purposes, he opted for old regime. However, at the time of filing the return, he realized that new regime is more beneficial. He can change the option which he has chosen at the time of filing the tax return. So these are other amendments. What are the other amendments? So these amendments are not related to the new tax regime or old tax regime. So employee may be under the old regime or new regime. These amendments are applicable for all the employees, irrespective of the regime which they have chosen. So one is the leave encashment exemption, increased from 3 lakhs to 25 lakhs from this year onwards. So at the time of exit or at the time of retirement, if the employee has any leave encashment on the unpaid leaves, he can claim deduction up to, exemption up to 25 lakh rupees. And this 25 lakh rupees is the lifetime exemption. This is not from one employer. So if I have changed employers in my career, multiple employers, and I have claimed the leave encashment exemption, the maximum amount for all the employers put together is 25 lakhs. So you may ask a question, as an employer, how would I know whether he has already availed this benefit in his previous employments? So what general practice is to take a declaration from the employee that he has claimed or he has not claimed. If he has claimed, to what extent he has availed this exemption with his earlier employers. So accordingly, the employer can grant the exemption. Then the next one is the profession tax amendment for Karnataka. This is for Karnataka only. Earlier, the salary threshold was 15,000 rupees. Now that has been increased to 25,000 rupees. So the question may come, if the employee is exactly drawing 25,000, whether he comes under profession tax or not. So the amendment is very clear. It says that if the salary is 25,000 or more, then profession tax need to be deducted at the rate of 200 rupees per month. So only if it is less than 25,000 rupees, you need not deduct profession tax. So whether if it is 25 or more, you have to deduct the profession tax. And another thing is, what is the salary for this profession tax? Whether it is CTC, gross salary, or net pay. It is gross salary. Your CTC may include components like your gratuity or maybe a group insurance benefits, which you are giving it to the employee. Sometimes it includes even variable pay as well. At the beginning of the year, where that needs to be determined at the end of the year. So CTC is not the criteria to be looked into for profession tax. It is gross salary for the month which you need to look into, and then accordingly deduct the profession tax. So here comes the second polling question for the day.
Sure. So dear audience, I think the poll is up here. So I'm sure all of you might have received. So please provide your answers in the poll here.
So the question is, are you giving the choice to the employees to change the regime chosen by them during the year for tedious purposes? So in the month of April, you gave the choice and the employee chose old regime. And again, in the month of May or June or before March 2024, are you giving an option for him to change the regime which he has chosen?
I think, Mr. Amaranath, this was a very discussed question last year as well.
Yes.
Yeah.
That's true. Yes.
So dear audience, I hope all of you are able to access the poll there. You can see the question. And you also have 3 options for this. So please vote for the right one. And if you find it difficult to access the poll, you can see the same question on the screen as well, the Zoom screen. So you can get the question from there as well. But please note that your answers are only recorded through poll.
Yeah, that's important. So you have to submit the poll after.
Right. So yeah, I think it's now time up. So we are going to end the poll now. So let's see what's our audience question answers.
52 no, 46 and not on 2%. So majority of you are giving the choice to change. And when you look at the circular is very clear that the employer should not give the option. I mean, it is not a choice to the employer, but straight away the circular says the option should not be given. So if you are giving, I mean, I would say, I mean, of course, it may be more employee friendly. However, from an administrative perspective also there could be challenges for the employer, and also from a regulation perspective also the circular does not permit. So you may have to rethink on whether to give that option or not.
All right. So, Mr. Amaranath, just a minute. So, dear attendees, so here is the answer, and Mr. Amaranath has brilliantly explained what is the right way of dealing with it. So, in the meantime, while we continue our presentation and the discussion with Mr. Amaranath, please start putting across your questions in the Q&A option of the Zoom control panel. And in some time soon, we will be taking up all of your questions. Over to you, Mr. Amaranath.
Yeah, thanks, Rashmi. Okay, so I mean, we are coming to the last topic of today's session, that is higher contributions to pension. Very interesting topic. I mean, I would say, especially the MSME sector, where they have not paid much attention towards this. But this is a major amendment, an important amendment. If the employee opts for it, again, it requires changes in your payroll. So just to give a background to the PF regime, I mean, applicable to the establishment where the employer has employed 20 or more employees. In general, of course, the factories is a different criteria, but what we generally see is an establishment where 20 or more employees are employed, then PF regime is applicable to them. Coming to contributions, employee contribution is 12% of wages, and employer contribution is also 12% of wages. Of course, employer has two contributions, and which goes from this 12%. One is towards PF, the other one is towards pension. So pension contribution is 8.33% of wages, and wages for this purpose is restricted to 15,000 by default. So the maximum contribution of the employer towards pension would generally be 1,250 per month. So the balance contribution, which is 12% minus pension contributions of 1,250 goes to PF account. So what are the changes? Changes have not been brought with respect to Provident Fund, but the changes have been with respect to pension contributions. So just understand the pension scheme a little bit in detail. So employees who acquired Provident Fund membership prior to 1st September 2014, which means to say that prior to 1st September 2014, I am a member of the PF and I have been contributing to the PF. So this pension scheme is applicable to them. So employees who acquired the PF membership post 1st September 2014 and have a monthly wage not exceeding 15,000 rupees. This is again, it's not the total wages which you need to see. You need to look at the PF wages. PF wages generally, in general parlance, it is only the basic salary. So if it's the basic salary is not exceeding 15,000, then he has to become a pension member, or he will, by default, he will become a pension member. So employees who acquired the PF membership post September 2014 with a monthly wage of more than 15,000 are not eligible to become EPS. So this amendment and what we are going to discuss is not applicable in a straight way. It is not, in a simple way to put it, it is not applicable for the employees who have joined as a fresher, which is a first time employment, or where he is not a member of the PF in his earlier employers. These amendments are not applicable to them. So the last one is another important aspect with respect to pension scheme is the employees who are contributing PF on wages above 15,000 had an option to contribute to the higher pension as well prior to 1st September 2014. So, I mean, we all know that if the salary is more than 15,000, 12% of my basic goes to PF. And as an employee, I can choose to contribute more also for employee contribution. More than 12% also I can choose and I can contribute. Similarly, even for pension, that clause was available, that option was available prior to 1st September 2014. So from 1st September 2014, what happened? the PF authorities came out with a notification saying that we are not going to allow beyond this date. A particular date was announced, and they said that, I mean, if you want to contribute, if you want to opt for higher pension, you need to do it before this particular date, and beyond this, you will not be able to contribute. We are completely withdrawing that higher contribution scheme itself. So a particular date was given. However, employees were not able to submit. PF authorities, in many places, PF authorities itself were not not accepting the applications for higher contributions because they were not much educated. They were not aware of this. So what happened? Many employers and employees went up to various high court. They filed writ petitions saying this amendment itself is not logical. So the option was given by the act, and suddenly it cannot be withdrawn by the PF authorities. So various high courts gave different views. Some ruled in favor of the employee, some ruled in favor of the employer. Finally, it went up to Supreme Court. So the Supreme Court came out with final verdict on 4th November 2022, and they said that the withdrawal of this scheme is very much permissible. It is very much within the rules of the law. However, in order to provide certain relaxations to the employees, Supreme Court came out with certain amendments to the notification. They said that the withdrawal is completely accepted. However, it cannot be such stringent. So we, considering the employees' request, we are coming out with certain relaxations with respect to those notifications. So what are the Supreme Court points here is, option to contribute on higher wages extended to all employees who are members of PF prior to 1st September 2014. They provided 4 months window to exercise the option. That is November 4th to, the verdict came, and they provided 4 months. That is till 3rd March 2023. Of course, the PF authorities have extended this date to 3rd May 2023. So 3rd May 2023 is the last date for any employee to choose for higher pension. So Supreme Court also directed to transfer 8.33% of differential contributions from PF to EPS. So when Supreme Court came out this, obviously PF authorities raised a concern saying that where do we get the funds from? Then Supreme Court said, so no need to worry. If a person is wanting for higher pension, from the date he became the member of the pension, so you transfer the differential amount from the PF account to pension account of the employee, so that you will have more funds to pay the higher pension, is what the Supreme Court said. Then earlier, there was an additional contribution of 1.16% from the central government side if the employee is opting for higher pension. However, Supreme Court said that central government cannot take up this responsibility anymore. So the additional contribution, if you want, needs to be diverted from employees' PF contributions. So from PF account, again, this 1.16% will be diverted to pension account. The employees who had retired prior to 1st September 2014 without exercising the option for higher pension are not eligible to opt for higher pension now. So employees of exempted establishment, which means to say that the Provident Fund Trust. So if the employer has a PF trust and he is not contributing PF to the authorities, even for those employees, the Supreme Court said the benefit needs to be extended. So even if the employer is running a PF trust, the employees of that entity can also opt for higher contribution, and they can make an application to the PF authorities in this regard. So this comes out as to, so based on the analysis of the Supreme Court decision, who are the eligible, what kind of an employee is eligible for higher pension or who is not eligible? So there are 5 different categories where I have bucketed this. So employee who has joined employment after 1st September 2014, who has become member after 1st September 2014 with a pay of more than rupees 15,000. So as we discussed, he is not eligible to pension at all. So there is no contribution to the pension. So he is not eligible to opt for this higher pension scheme. So next set of employees are employee who has retired from employment prior to 1st September 2014 without exercising the option under the old regime. So earlier also there was this option as we discussed. So the employee has not opted for this at that point in time, but he has retired prior to 1st September 2014. So he is also not eligible for higher pension. So employee who has been contributing to PF prior to 1st September 2014 However, he has restricted his contribution only to the wage ceiling amount of 15,000. So I am a member of the PF from 2000 onwards, say from past 20 years I have been contributing, but I have been contributing only to the extent of 15,000, not on the full basic. So even those kind of employees are not eligible to opt for higher pension. So employee who had not exercised the option under erstwhile scheme and contributing to the PF more than the wage ceiling. So I am an employee or a member of the PF from past 20 years, and I have been contributing to the PF more than my 15,000 of wage threshold. On entire basic salary, I am contributing. So I am eligible to opt for higher pension. So another set of employee who has retired post 1st September 2014. Say, I might have retired in 2018, but I was contributing to the PF more than the wage ceiling of 15,000. I was contributing on the entire basic. Am I eligible to exercise the option for higher pension? Yes. So those employees are also can also opt for higher pension scheme. So what is the impact of opting for this higher pension? Why there is so much confusion? And as an employee, how do I decide whether I need to go for higher pension or not? So the impact of opting for higher pension is like this. So the first column gives not opting for higher pension, and the second column gives opting for higher pension. The contributions, total contributions will not change whether you opt or you do not opt. I will come to that, what happens if you opt. So going forward, today I am opting for higher pension, and what happens to my contributions? So PF contribution, employee contributions remains as is. 12% goes to PF only, whether I opt for higher pension or lower pension, because my contribution will not change. So employer PF contribution, 3.67% of basic salary, which is 3,670 rupees. If I opt for higher pension, goes to PF actually. So because see earlier what used to happen, my pension contributions were restricted to 1,250. So 12,000 minus 1,250, which is 10,750 used to go to PF. Now 8.33% of basic salary without restricting on the full basic salary is going towards pension. So assuming my basic salary is 1 lakh, 8.33% comes to 8,330. So 3.67 comes to 3,670. So going forward, my contribution to PF, which is employer contribution to PF, is significantly reduced, which is it will reduce by 2/3. Only 1/3 of the employer contribution goes towards PF. So what is the consequence of it? So what happens? So okay, I'm anyway getting more higher pension. No, see, the PF is a lump sum withdrawal at the time of retirement or at the time of exit. PF comes as a lump sum, and it is completely tax free. So the funds are available with you, and according to your whims and fancies, wherever you want to invest, and it is freely available to you, completely tax free. However, in the case of pension, you are going to get it post-retirement, and it is going to be an annuity kind of a thing where it is a monthly pension will be paid to you, and your PF corpus will significantly get reduced because the higher contributions have gone to pension. So from pension, when you look at monthly pension, what you are going to get is completely taxable, whereas PF contributions, the lump sum is completely tax exempt. So just because there is no impact on the contributions, an employee cannot decide whether to go for higher pension or do not go for higher pension. So it is a calculation which they need to do considering so many other factors like age of the employee, family size of the employee, the tax implications, and also the investment decisions. So all these need to be considered before deciding whether to go for higher pension. There are some advantages also, I'm not denying it. So in the case of demise of the employee, the wife is going to get 50% of pension, and also the children less than 25 years are going to get quarter of the pension, which means up to 2 children. So the entire pension will be paid to the family in a way in the case of demise of the employee. And also wife is going to get, even being in a private sector, the employee's wife is going to get the pension if the employee dies during the post retirement or even during the employment. So, I mean, generally these pension we have seen only in the government sector. However, even in the private sector, the spouse is eligible for pension if you are going for the higher pension. I mean, of course, I mean, she is eligible for pension even if you are not going for higher pension, but however, the amount will be very minuscule, which may come to 1,000 or 2,000, 3,000. But however, if higher pensions are opted for, then the pension amount may be significantly high. So, I mean, if an employee opts to contribute pension on higher wage, then the differential funds from PF account will be diverted retrospectively to pension account, which means to say that this is going forward, this is what we discussed, but what happens to my past PF contributions? The past PF contributions, when you look at your passbook, you can clearly make out what is employee contribution and what is employer contribution. So, if I'm opting today to the new pension, I mean higher pension from April onwards till March 31st, 2022, they will see what is the employer contribution in PF account. So 2/3 of that, say suppose I have a corpus of 10 lakhs in my PF account as employer contribution, 2/3 of that, which is means to the 6,66,000 will be moved to pension account. And your corpus will be become employer contribution corpus will be only 3,67,000. So what happens to this? You are going to get in the form of annuity. You are never going to get the lump sum under pension scheme. It's always an annuity. It is a monthly pension, and you are going to get, and your spouse is also going to get. So what, I mean, before coming to the poll, so what are the changes to be looked into in the payroll when the employee is opting for higher pension? So accordingly, you need to divert the contribution. So in your payroll softwares, you need to modify this, and you need to ensure that the higher amount is going towards pension, especially the employer contribution is going towards pension. So this is one significant amendment from a pension perspective where the employers need to be looked into, and only in the case employee has opted for it. So the third polling question for the day and the last polling question.
Yes.
So have you intimated your employees about this option of contributing to higher pension? So how many of you have intimated this? Because employees are laymen. I mean, they are common men. They may not be knowing what are the changes have been brought into PF or pension. So any communication has been rolled out or any FAQs have been rolled out. Many companies are initiating, I mean, email communication. They are, I mean, forwarding the notification. They are simplifying the notification in the form of FAQs, and they are rolling out to employees to understand the scheme better. And some companies are hosting the help desk as well, where the employees can, I mean, contact them for their questions on higher pension. The help desk will help them out in better to choose whether to choose or not the higher pension contributions.
I hope all the participants are able to access the poll. So Mr. Amaranath has already elaborated the question and also has given the hints on the right answer. So please vote your right answer here. All right.
Oh, yes.
Yes, yes.
34% says yes, and 58% no, and not known 8%. Okay, the majority of them have not communicated. Okay, now the question arises, many of you may ask me as to, are we legally bound? As an employer, am I legally bound to communicate this to the employee? The answer is no. Because nowhere in the circular or in the FAQs released by the PF department, they obligate employer to communicate this to the employees. However, though there is no legal obligation, practically when you look into as an employee-friendly organization, as a best employee practices, you may consider this to communicate to the employees and educate them on this, so that tomorrow, I mean, post 3rd May, the employee should not come back to you saying, I mean, you have not intimated or you did not educate me on this. So at least an option should be given to them prior to the due date, so that if they are willing to contribute, they may opt for it. So that's all from my side for today. So I hope I'm not okay. I'm exceeded by 5 minutes, but that's still okay.
No
Yeah.
problem, no problem, Mr. Amaranath. In fact, thank you for such an insightful and knowledgeable presentation, Mr. Amaranath. I'm certain that our audience has gathered a lot more information and the details on this buzzing topic. So I can already see the audience questions are flooded here. So dear participants, we are now taking up your questions one by one. So the first question is from one of our attendees, Mr. Viper. So Viper's question is, are NSA, OT and reward-based allowance are taxable in new regime?
So OT is overtime and reward-based allowance is anyway okay, rewards and recognition, whatever you call it as. So NSA, I'm not sure what it exactly means, but OT and reward-based allowances are, yes, they are taxable in the new tax regime. Yes.
All right. Thank you, Mr. Amarnath. I hope that answers the question. Next question is from Anu. So Anu's question is, standard deduction of 50,000 is available under new regime as well, right?
Yes, yes. 50,000 standard deduction is the new amendment which has been brought in from 23-24. So from 23-24, it is available.
Sure. Thank you so much. So next question is from Reena. So Reena's question is there a deadline for the employees to select between old and new regime?
Yeah, as I already mentioned, it is the payroll deadline. Generally, employers have rolled out the option already, and before running the first payroll, they will close this option. However, from statutory point of view, there is no deadline prescribed because it is understood that employer to run the first payroll itself, he should have this information. So before running the payroll, he should have this data from the employees. Accordingly, companies are free to fix their own deadline for this.
Sure. Thanks for the clarification. So next question is from Sachin. So Sachin's question is, how many times employees can switch between old regime and new regime for the financial year, which is again done by employee itself?
Yeah. So as we discussed, there was a polling question as well. There cannot be switchovers, I mean, as per the rules. So if you are giving that option, please relook into it. Yeah.
Sure. Also, one of our attendees would like to know, what if my salary is 7 lakh 1 rupee? Will I get any respite?
Yeah, because anyway, your standard deduction is there 50,000 rupees. No need to give any proof for standard deduction. So your salary comes down below 7 lakhs, it becomes 60 lakh 50,001. So you are eligible for the new regime where there will not be any taxes. So I will rephrase this question. So 7 lakh 50,001, if you say, so if you are deducting the 50,000 standard deduction, then you will remain with 7 lakh 1. So there is no rebate available once your income crosses 7 lakhs. So 7 lakh 1, you have to calculate the taxes and then pay the taxes.
Sure. So I hope that answers the question. Next, we have Kishore's question. The question is, which items are covered under deductions or exemptions to evaluate new regime for break-even point of 4.25 lakhs?
It does not depend on the nature of deduction or exemptions. What I have taken is the total of deductions as exemptions, which qualifies for in the old regime, basically. It is not new regime because deductions and exemptions I have taken as per old regime, which qualifies under old regime, and I have added 50,000 standard deduction to it. So 4.25 lakhs is the eligible deductions and exemptions, including standard deduction under old regime.
Sure. And next question is from one of our attendees. The question is, professional tax amendment is applicable from which date?
So this is applicable from 1st April, which means to say that the first payout, that is April month's payout, whenever you are doing, it is applicable from that month, April 2023.
All right. So next question is from Deepak. Hi, Deepak. So Deepak's question is, what action to be taken by employer to choose regime to employee?
So employer, I mean, need not take any action as such. If the regime is not chosen by the employee, as we already discussed, new regime is the default regime. Employer has to presume that it is new regime and accordingly deduct the taxes.
So the next question is about leave encashment. So the question is, I'll just take it up here, Mr. Amaranath. So the question is, leave encashment declaration is a self-declaration by employee. There is a chance of declaration not availing, though availed. So this question is for Rashmi. Will the IT declaration of financial year 2023-24 in greytHR capture the leave encashment paid by previous employer in case of new employees? So I'm not sure who has posted this, but yeah, the answer is right now in greytHR, we do not have the provision to capture the leave encashment for the previous years in the IT declaration. But what we can definitely do is we can definitely make it as an external entry during the payroll processing time. Certainly, it needs some certain configurations to be done from the backend. So what I would suggest is if you are facing this issue, please get in touch with our support team. We will definitely help you out with this. So I hope that answers the question. So Mr. Amaranath, I'll just take up the next question. So
Sure.
this question is related to meal voucher. So it is from Raghavendra. So Raghavendra's question is, meal voucher is exempted in new tax regime. Yes or no?
No, meal vouchers are not exempted under new tax regime. So meal coupons or Sodexo coupons, if you are giving, that is taxable under the new tax regime.
Sure. And next question is, what is the procedure to initiate VPF? So voluntary PF, if employees request for it.
So basically, I mean, they will come out with a request and you have to collect the details as to what more percentage they want to contribute. And accordingly, there is an option in the payroll system, I think even greytHR too. So you can manually or you can, I mean, enter the amount of higher contributions and accordingly run the payroll.
Sure, I hope that answers the question. So next is Ananya's question. So the question is, for new regime, do we consider fuel and mobile expenses or broadband reimbursement for tax exemption?
Yes, the fuel exemption or mobile or broadband expenses reimbursement qualifies as exemption even under the new regime. That benefit is not withdrawn under the new regime.
All right. So next question is from Manish. The question is professional tax eligible? Is it eligible for exemption in new regime?
No, professional tax is not an eligible deduction under the new regime.
All right. So Mangesh is asking, can you join newly joined employee in PF in April 2023 who is paying 12% of basic can contribute higher EPS from April onwards?
The answer is no, because he is not a member. I presume that he is not a member as on 1st September 2014. So as on 1st September 2014, if the employee is a member of PF and if he is contributing to the PF on more than the 15,000 threshold, then only he is eligible. So if the employee is becoming an employee, new joined employee, so you need to check whether he may be a new joinee for your organization, whether he was a member of the PF as on 1st September 2014, and then you need to see further he meets the described criteria or not. So if he is not a member as on 1st September 2014, then straight away you can conclude that he is not eligible for higher pension.
Sure. So the next question is, what will be the salary range for charging professional tax in Gujarat?
Gujarat. Sorry, Gujarat, I'm not sure. I need to look at it and then come back to you on this.
Yeah, sure, Mr. Amaranath, no problem at all. So, dear attendee, like I already mentioned, we were planning to just discuss about the Karnataka state compliances here. So, you can just drop this question to us on the mail ID that I'll be sharing at the end of the session. We will definitely get back to you with the response. So moving on to the next question, it is from Madhu. So the question is higher pension helpful for existing employees?
We cannot conclude straight away. There are so many factors as we discussed: the age of the employee, his salary level, and his expected lifespan, then income tax implications, then how he wants to his funds to be available at the time of retirement. All these need to be considered. So there's no straight answer, yes or no. For the employees to choose for higher pension, it needs to be computed and then see.
Sure.
And lot of assumptions gets in there. So it's not a foolproof calculation. However, at least it gives some idea as to whether to go for it or not.
All right. I hope that answers the question. Also, dear participants, please note that we have already exceeded our time limit, but we are trying our best to take up your questions and answer them. But if we happen to miss out on any of your questions, do not worry. We will definitely get back to you with the response either on mail or any of the greytHR mediums. All right. So with the interest of time, I'll try my best to take a few more questions before we conclude this session. So next question is from one of our attendees. Under PF Act 58, there's superannuation. So has there been an amendment to it? Can we continue an employee under EPS also till 61 years?
No, I don't think so, because the age of superannuation under the PF Act still remains as 58. So beyond 58, the entire contribution has to go to PF only. There will not be any diversion to pension contribution.
Sure, Mr. Amit. So the next question is, one of our attendee would like to know the tax deduction under old regime because they want to change the salary structure for their employees so that they can have more benefits on tax saving.
Yeah, true. We have discussed what are the exemptions and deductions which are not eligible under the new regime. So you can just flip on the other side. So all those deductions and benefits are eligible under the old regime. So accordingly, you can look into and structure the salary.
Sure. And I'll take up the next question. So it has been discussed that conveyance allowance is exempted under new regime. So if we have conveyance allowance in this salary structure, will that be considered for exemption or no?
Conveyance allowance is exempted only to a Divyang employee. Divyang employee means who is physically challenged employee. So only for him, conveyance allowance is exempt under the new regime. So if we have conveyance allowance in the salary structure, then for normal employees, no, that is not allowed as an exemption.
Sure. Also, Mr. Amaranath, one of our attendees have this interesting question for us. The question is, employees are still choosing old regime because they already have done investment as per ATC, and hence they prefer the old regime. Whereas in new regime, we can see that exemptions are not seen much. So how to handle the situation now?
Okay, if he has already chosen old regime for payroll purposes, okay, you have to continue under the old regime only. However, as we discussed already, he will always have an option to change the regime at the time of filing the tax return. So in case if the the taxes withheld are more, TDS is more, he can claim that as a refund at the time of filing the tax return by going for the new regime.
Sure. Also, the next question is, we have already mentioned that under new tax regime, the exemption limit is up to 7 lakhs per annum. Then why does it state that 5 to 6 lakhs per annum is 5% deduction?
No, this I'm comparing 5% deduction. As you said, under the new tax regime, the exemption limit is to 7 lakhs. No, the basic exemption is not changed. Basic exemption under the new regime is only up to 3 lakhs. So what is available between 3 to 7 is the rebate. So for comparison purposes, between old and new regime, I have, because the rebate under the old regime is only up to 5 lakhs. So for comparison purposes, I have taken even 5 and 6 lakhs. So to what extent your exemption should be in order to break even is what the question, the slide was. So I just to start with, I cannot ignore 5 and 6 because 5 and 6 lakhs are still available under the old regime. So I have put that also. But anyway, your understanding, like, it is not the exemption, it is the rebate which is available. So if the total income after considering the standard deduction is less than 7 lakhs, he is not going to pay any tax under the new regime.
All right, so I hope that answers the question. So the next question is from Shashank. So the question is, if employee choose new regime for financial year 2023 to 24, and next financial year he or she wants to opt back to the old regime, is it possible?
Yes, it is very much possible for non-business individuals. So for non-business individuals, this option is every year. Every year they can choose which regime they would like to go for. But in case of business individual business income, in case of individuals having business income, this option slightly changes. Since today's discussion is only with respect to employees, we have not covered that. But yes, they can change every year if they do not have business income.
Sure. So due to interest of time, I'll just take up one last question before we conclude this session. So the last question for today is from Kamal. So Kamal's question is, since the exemption and deductions are not available in the new regime, what would happen to section 17 to deductions? Since these are not excluded, such as fuel and driver, telephone expenses, health club, etc.
Under section 17(2) basically discusses the benefits in kind, which is perquisites, what we call it as. So for perquisites, generally all exemptions are available except the food coupons. So food coupons is where one perquisite benefit which is not available as exemption under the new regime. So having said that, whatever benefits you have listed, that is fuel and driver, telephone expenses, and health club reimbursement, all these 3 exemptions are available under the new regime.
All right. So before we conclude here, dear participants, as you can see on the screen, there are the contact details for Mr. Amaranath as well. So you can also reach out to Mr. Amaranath directly and get the answers to your questions. I think now it's time for us to end this session. So Mr. Amaranath, if you don't mind, can you please stop sharing?
Sure.
Thank you so much. Yeah. So on this note, I think it's now time for us to end this session. But before that, I would like to just share few mediums through which your customers can reach out to greytHR and also the mail ID. So dear participants, like I already mentioned, due to interest of time, we could not take up few of your questions, but you can always post your questions on our greytHR community, and the link to that is already given here. So basically, this is a knowledge sharing platform. You can post your questions and seek the responses there too. And I think now we are coming to end of the discussion. So if there are any questions, please drop it to the mail ID here, that is rakigautam@greytech.com. And once again, thank you, Mr. Amaranath, for this session. You have certainly given us a lot of insights on the payroll changes for the financial year 2023 and 24.
Thank you. Thank you. Thank you all the participants as well.
Yes. So, dear participants, thank you so much for joining this session and for making it successful. And please do feel free to reach out to us in case of any concerns related to our sessions, and you can write back to this mail ID that you can see on the screen. So on this note, I'm going to end this session now. We'll see you soon again with another interesting topic. Till then, have a great time. Stay safe. Thank you.
Thank you.